Welcome to The Explainer. Today, we're diving into what is literally the ultimate high-stakes balancing act in the biotech world. We're looking at Biohaven, ticker symbol BHVN. It's a clinical-stage biopharmaceutical company operating right at the bleeding edge of immunology, neuroscience, and oncology. In this sector, you are essentially burning mountains of cash today for the promise of a medical revolution tomorrow. So let's look at the hard data to see exactly how Biohaven is navigating that massive risk.
Here's our roadmap for today. We'll quickly hit a corporate snapshot, dive into their Q1 financials, explore their innovation pipeline, and wrap up with analyst forecasts.
All right, let's jump right into part 1, Biohaven's corporate snapshot.
So as of late June 2026, Biohaven is trading at exactly $15.83 a share. But, a single share price really only tells us a fraction of the story. To grasp the market's true bet on this company's future, we gotta zoom out. At that price point, the company is commanding a massive market capitalization of roughly $2.38 billion. So we're not talking about some tiny garage startup here. They've got serious institutional weight. But here's the catch. A multi-billion-dollar valuation in biotech almost never means they're actually turning a profit today. And here's the proof of that. Their trailing 12-month earnings per share sits at a negative $5.67. Look, this is just the reality of clinical-stage biotech, right? They're pouring capital into R&D long before a drug ever sees the inside of a pharmacy. So the real question we need to ask isn't if they're losing money, but rather, how efficiently are they managing that cash burn while building out their future?
Which brings us to Section 2, their Q1 2026 financial realities.
Looking at their May 4th Q1 report, Biohaven actually posted a slight earnings miss. They came in at an 88-cent loss per share versus Wall Street's expected 86-cent loss. Now, a 2-cent miss might sound completely trivial if you're an outsider, but in a sector where every single dollar of runway is a lifeline, analysts scrutinize these margins heavily. However, that top-line miss actually hides a much more important strategic move. Check out this dramatic shift in how they're allocating capital. Management executed a massive strategic reprioritization. Their research and development expenses absolutely plummeted from $187.6 million down to $103.8 million year over year. That is an $83.8 million savings in a single quarter. They achieved this by focusing their firepower strictly on their highest value late-stage programs.
In that leaner approach, it buys them time. By the end of Q1, they were sitting on almost $352 million in total cash and marketable securities. In biotech, cash is literally oxygen. This runway is absolutely crucial because it fully funds their upcoming clinical trials through the end of the year, meaning they don't have to immediately dilute current shareholders just to keep the lights on.
All right, let's pivot to the science in Section 3, the innovation pipeline.
Right at the bleeding edge of their research, Biohaven is pioneering what are called mode and trap degraders. The best way to think about these, they're basically like highly targeted cellular garbage disposals. Instead of just temporarily blocking a bad protein, these bispecific molecules actually bind to disease-causing proteins and actively drag them to the liver to be completely destroyed. It's a radically different, game-changing approach to treating autoimmune diseases.
And because of this incredible science, the rest of 2026 is going to be an absolute gauntlet of critical clinical catalysts. We're going to see the start of pivotal trials for their lead degraders in both Graves' disease and IgA nephropathy by mid-year. But the real fireworks happen in the second half of the year, with massive data readouts expected for both their Phase 3 epilepsy drug and their highly anticipated Phase 2 obesity treatment.
Let's take a closer look at that epilepsy drug, alfa. This Phase 3 asset is designed to regulate hyperexcitability in the brain to control seizures, but its massive differentiator? It aims to do this without the heavy, debilitating sedative side effects, like extreme drowsiness, that totally plague current medications. If they can actually pull this off, it's not just a medical win, it is a massive quality-of-life upgrade for patients. They're also stepping into the absolute behemoth that is the obesity market with a drug called Taldefgrobep alfa. Now, current GLP-1 drugs often cause patients to lose a lot of muscle right alongside the fat. Biohaven's drug takes a totally different route. As a myostatin activin pathway inhibitor, it uniquely aims to burn total body fat while actively increasing lean muscle mass. If the Phase 2 data proves this dual action effect works, it could completely disrupt the current weight loss landscape. So how is the street reacting to all this? Let's look at Section 4, Analyst Forecasts and Outlook. First off, it's very clear the institutional space takes Biohaven seriously. You can see them here, sharing the main stage agenda with the absolute biggest titans in pharma at the highly influential JP Morgan Healthcare Conference. They are viewed as a major contender here, definitely not a fringe player. Currently, 19 analysts cover the stock, and their price targets perfectly illustrate that wild risk-reward spectrum of biotech we were talking about earlier. You've got conservative lows down at $9, an average consensus sitting at $21.71, and then some highly optimistic projections rocketing all the way up to $50. That high end, that implies an over 200% upside from its current price.
And, despite the heavy cash burn and that recent slight earnings miss, the street's consensus remains overwhelmingly positive. Out of those 19 analysts, 14 are saying buy or strong buy, 5 are saying hold, and absolutely 0, literally none of them, are recommending a sell right now. Wall Street clearly believes this pipeline justifies the patience.
Which really leaves us with the ultimate multi-billion-dollar question. With millions being burned every single quarter, but potentially billions on the line in the obesity and epilepsy markets, will the upcoming late 2026 data validate that massive financial risk? You're going to want to keep a very close eye on those phase 2 and 3 readouts, because they won't just move the stock price, they're going to decide the entire future of this company. Thanks for joining this explainer, and keep learning.